But let's shift focus to the chemical space and try and understand how the second wave has impacted, or whether or not it has impacted domestic demand. Let me welcome on board Vinati Saraf Mutreja, MD at Vinati Organics, joining in on the show right now. Vinati, great to have you on the show. Help us understand if the second wave has at all impacted companies such as you.
Firstly, understand we are mostly an export-oriented company. 75% of our revenues come from export. Now, globally, there's been a huge demand recovery, especially when it comes to US and Europe. So we are seeing a lot of surge in demand, and that is true for all exporters of chemicals. Domestic demand is slightly impacted, but not too much. At least our chemicals that we sell domestically are used in agrochemicals or pharma, which are basic essential goods. So the demand is not impacted. Now, coming to the operations, in April, May, yes, there was a fear of COVID. And even though most chemical companies got permission to operate, they were restricting manpower flow into their premises in order to maintain social distancing, etc. And as a result of that, yes, production has been a bottleneck for most companies just to keep up with the demand.
Vinati, also wanted to understand, given that a large part of your supplies are outside the country and, we have seen a solid recovery pan out across many geographies led by US, China as well. What's been your sense on how strong the export market is going to continue to grow, and whether or not the export story for you is going to grow multifold in the times to come?
See, we have visibility at least for the next 6 months. Our customers are very bullish. There has been a huge demand recovery, especially when it comes to ATBS. That's a very versatile product that goes into oil and gas, mining, construction chemicals, etc. And as of now, we are oversold. Production is the bottleneck. We had started a new line. We are running it, but not able to run it at full capacity, even though the market is there. So, and that holds for a lot of other products as well. Now, for us, again, butyl phenols is a new segment that we got into last year. And Jan onwards, we are seeing a huge, our product has been well accepted in the market. Quality is approved. But we are pricing it very competitively as we are a new entrant. We are facing competition from imports. Raw material prices have increased, whether for ATBS or for butyl phenols. And one is not able to completely pass on that increase, as we do have contracts in place.
Okay. Vinati, good morning. Do you see better realizations and margins going forward as we also start to see volumes go up here in India?
See, realizations, prices will increase slowly and steadily as we are, as we pass on the raw material price increase to customers with a quarterly lag. But like I said, for our company, a lot of growth would be coming from butyl phenols, where the margins are not as high as, say, for example, the other businesses that we are into. So going forward, I would expect for our company, the EBITDA margins to stabilize somewhere in the range of 30 to 35%.
Okay, and while Q4 was slightly weak, do you expect that trend to change now going forward?
No, absolutely. Q1, we are seeing a recovery. The demand is strong. Logistics also was a challenge March end. There was a severe logistics freeze globally, which is smoothening out now slowly. And the trend is definitely in the positive direction. We expect to do over 80% of volumes of ATBS that we did last year. Overall, for the company in general, I expect a 40 to 45% revenue growth in FY22 compared to FY21.
How would you characterize the inventory levels in the supply chains? Typically, when there is a big spike in product prices at local level, at distributor level, inventory levels, they tend to go higher. Do you think there is a lot in inventory stocking which has happened because of commodity inflation?
I don't know. I mean, at least for us, if my raw material prices are higher, I would maintain very low inventory. And supply chain wise, I don't think there is a lot of inventory is the issue right now. It's just that demand has suddenly surged, and most companies worldwide are finding it hard to keep up with that. Some have undertaken maintenance shutdowns, or some were shut down last year because of COVID and are finding it hard to ramp up. So that is really the issue as of now.
So how will the unlock of last year versus the current state unlock is different? I mean, when the economy will start normalizing, I'm assuming that the COVID second wave has peaked out. How do you see the pattern changing?
See, of course, last year the lockdown pattern, especially in April, May, was very strict. It was very tough to get permissions to operate. Truck drivers were running away. You weren't getting transport. People were too scared to show up in factory premises. Of course, over the last 1 year, people have understood how to work around COVID, how to work with COVID while maintaining the required norms, social distancing norms, and other COVID protocol. And even the collectors at the factory level understand what factories are essential services, and there hasn't been a restriction in manufacturing as such. Of course, capex is delayed because that's the one area where when you're restricting labor or in your premises, it's the contractual workers that you restrict first, and so most companies are unable to deploy capex as anticipated, at least in this quarter. Logistics is not so much of an issue, just that freight rates globally have gone down. But Q2, I expect a recovery, but capex will take time. It's tough to get consultants, the engineering staff required, and you will see that across the board.
And just to wrap it up, at what point in time do you think, because of the recent uptick in prices, demand will start getting impacted? Because there would be a point beyond which the demand will start getting impacted because of the underlying jump in prices.
I think somewhere around Q3 of this fiscal, around September, October is when you will see normalization in demand as well as pricing. And so give it another 3 to 4 months and things should go back to normalcy.
Vinati, great to have you on the show. Thank you so much for taking the time out and speaking with us today. That's the word coming in from Vinati Organics on how the business has been panning out amidst the second wave. Pretty intact when it comes to the export market regardless.